Hey guys, Ben from Pivot, and I wanted to put together this video to unpack what the output of the financial planning process at Pivot Wealth looks like. Something that we get a lot of questions on, and I get that if you haven't gone through this sort of process before, or haven't got a financial plan before, or haven't got this sort of financial plan before, it's hard to know what to expect. So I wanted to unpack that. Essentially, there are two main deliverables which I'm going to talk through. One is the modeling output from the scenario modeling that we look at. The second is the statement of financial advice, and I'm going to unpack each of those in turn. Now, I've got an example here, a real life example, essentially, of a client where we've looked at a number of different scenarios. Now, you can see that we've got a baseline there, and then there are a number of different scenarios which I'll unpack. Buying property, selling property, doing debt recycling, etc. So looking at the baseline, and this is where we generally start, we look at someone's asset position, their liability, and overall net wealth. For the engineers watching along, or the detail focused people, you might notice that the net worth position in this one is negative. And that's because when we look at net wealth, we're looking at we're including a home mortgage as a financial liability, but not a home as a financial asset, because it's lovely to have a nice roof over your head, but ultimately it's not something that delivers you, investment income. So what we see in this scenario, and what the clients are doing before coming to see us, is they were looking to pay down their home mortgage debt over a number of years, then look to upgrade their property. That's why the debt spikes back up, and then pay down that debt, and then focus on building their assets into the future. So this is the baseline. Obviously, there's a lot of detail that sits underneath this, where we're making sure that the lifestyle fits in, that they want, children, schooling, childcare, all of those sorts of things, and any other lifestyle considerations, and then looking at how investments fit. So the next scenario that we looked at for these guys was just a straight debt recycling strategy. So essentially keeping the existing property and then building that over time, building the investments. And you can see that this is the net wealth value over time. So you see that overall net wealth, there's a significant uplift as a result of going down this pathway, as opposed to just the straight upgrade principal place of residence scenario. Then we looked at, okay, well, what does it mean if we bought the new principal place of residence immediately and then sold an investment property, and we assess, what is the impact on net wealth behind the scenes? And we do this in a separate screen, which I won't show just for privacy purposes. But essentially, how does a cash flow look week on week, month on month, year on year? And then looking at the bottom line from the asset position perspective. What happens if we sell the principal place of residence and buy an investment property instead? You see that has a positive impact. And this is probably the more likely scenario that these clients would look to follow after talking it through, which is the principal place of residence, debt recycling, and selling their existing home. And it sort of demonstrates that often the best strategy for most people isn't necessarily just the one that's going to give the biggest financial return, but it's the one that ticks the important lifestyle goals and allows people to live the lifestyle that they want over time as well. So we never know exactly what these scenarios are going to look like before we jump in, but that is, sort of the approach that we take to ultimately help people choose the best pathway forward for them. So that's the modeling output. And then this piece is the statement of financial advice that is delivered at the back end. Now, this is a reasonably long document, and it's probably a little more boring than I would like it to be, but it is important because it goes through a bunch of stuff. I'm not going to talk through it all, but I will talk through just the key points that people should be aware of and across, I suppose, to understand where it sits and where the value might be. This piece talks about our services, how we work. One thing that I'm pretty proud of, that I think is a strength in terms of what we do, is we measure the upside that people get as a result of the planning work that we do. So we look at, well, what were they doing when they came to see us, and what do they choose to do as a result of going through this planning process? And then ultimately, what is the asset position upside? Like, what is the difference in terms of how much better off are they as a result of making these decisions? So I think that can be good. And for every single client, we deliver this where you can see, okay, well, after paying some fees, maybe at the start we're a little bit behind potentially, but then over time, what does it actually mean? What's the opportunity there? The other way that we quantify the value is looking at what is the actual tangible immediate value that people get from our advice. So things like saving money on super fees, insurance premiums, investment uplift, investment property uplift, taking advantage of an employee share purchase plan. Some things we don't know, so like around CGT, etc. Debt recycling, annual tax benefits, advice, investment alpha, and we go, okay, well, the immediate things that we've done have delivered an impact of $274,000. So this one is probably, I'd say, maybe top quartile in terms of the numbers, but different for everybody, but it gives you a good sense of what it is that we actually look at. And again, we never know exactly what's going to go in here before we jump in, but we know that everybody, we stand behind delivering this so that you can see the quantifiable benefit that you get in going through the planning process. Total fees and the services, how they're going to work, what the fee breakdown is, how that's set up and what you pay essentially. Details, basic compliance stuff. And then this is like goals, targets, and strategy in a nutshell is really the key nuts and bolts. So unpacking human words, what do we want to do? We wanted to look at whether a debt recycling strategy works. Okay, great. This is how we want to do it. What are the other things that we want to do? Set up a plan around employee share plan, etc. What to do with regular cash savings? What are we going to use, etc. What's scoped in, what's scoped out of the advice, asset position here, risk profile, and then, for employee share plans, there's some chunky tables and stuff in here. Tax obligations are all calculated out on everything. Personal investment holdings, investment account, how we're recommending it. These guys, it's an ethical investment portfolio. What are the fees that are paying? All of that stuff needs to be crystal clear and transparent in here. And yeah, basically each strategy is unpacked in detail so you can see how it all fits together, banking structures and frameworks, all of the different things, so that essentially your every strategy is unpacked so you can see all of the nuts and bolts, how they fit together, any benefits, any downsides, and get confident in all of those bits before you pull the trigger and get things rocking and rolling, moving forward from there. So guys, I hope you find that helpful and look forward to chatting through with you in more detail. Bye for now.